Hello and welcome to Pro Trader Strategies Market Commentary for Monday, March the 7th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data out today. We do have FOMC member Bernard and Fisher speaking today, so that's the only thing we really have a whole lot to look forward to. Otherwise, the economic data that's come out today is not really that market pending, so the market's not really looking for that to move the markets, if you will. But on to the Nasdaq. Nasdaq, as you can see, is down 14 points on the day, really well off their lows. They've given back about half of the losses, or taken back half the losses, I should say, in the Nasdaq, as you can see here, forward/NQ. Onto the E-mini S&Ps, they are just in positive territory, as you can see, up one on the day, but pretty much a really quiet day. The market's trying to decipher which way it wants to go, right? The E-mini S&Ps /ES rallying in positive territory. Nasdaq still in negative territory. Just don't really see the overall markets really rallying that much with the heaviness that we're feeling in the Nasdaq. I think the tech sector's pretty much holding everybody down right now. This is a daily chart of the E-mini S&P, as you can see on a 15-minute segment. We've got the time value right here, right at the point of control for the E-mini S&Ps. We are above the value area that we've created today, so I would imagine that this is going to move up just a little bit. This outside value area high should probably move up a little bit. Onto some trades that I've done. Now, I talked about this forever. If crude oil was going to settle above $35 a barrel, I wanted to be in there and long and right it to about $38, $40 a barrel. So I went into the USO on Friday when I saw it was going to settle above $35 a barrel, or at least had that really strong feeling it was going to. And I went into the USO and just bought some cheap calls, and I did the April 10.5 calls, and I paid 17 cents for those. So that's a debit spread. So I have unlimited upside potential to that, but I'm probably going to cover this as soon as it gets up at around 10.5, which is where I think this support area is going to be. So that's where I'm looking for that trade, just to get a little bit of upside on that. And I really don't see it going that high just because of all of the oil that's out there. I mean, there's a glut of oil, but it's a technical point, so I figured I'd step in the water. Onto GLD, which I put on today, and I covered my GLD either Thursday or Friday last week. And the reason why is because we had a big run up. Everybody was talking about how gold was going to go higher. So anytime the overall picture is looking like everybody's getting into gold at these prices, that's when I want to be getting out as a contrarian, if you will. So today I just decided, you know what, this looks like it kind of topped out a little bit, at least for the short term, and went into the April 124, 127 call spread. So I sold the 27s and sold the 24s and bought the 27 calls, just getting in well above where this high was, and collected 77 cents for that. So bearish position, gold being at 52-week highs and just has this massive rally. I think that there's going to be a lot of longs that are going to start to want to cover a little bit if we start seeing any kind of weakness in this at all. So that's what I'm trying to take advantage of, get into this trade and have some of the vol come out of it, have a slight long cover sell off and make some money in there that way. That's about all I got for you guys today. Friday's webinar went off really good on defending the iron condor. I think a lot of people got a lot out of that. I was getting feedback from people saying, you know, I didn't know that you could defend an iron condor. I just usually thought you had to go with the max loss, maybe roll it out in time. But we talked about some really good defensive strategies and how you can be aggressive and defensive at the same time with that strategy when it starts going bad. So check that out. Go to protraderstrategies.com. Sign up for that. It's a 3-part series also. So we talk about the rules of implementing a iron condor, implementing a iron butterfly, and then how to defend those when they go bad, because the probabilities are that, you know, about 1 in 3 or 1 in 4 will go against you, and that those probabilities played out. We had 2 that came off nicely, and then 1 we had to defend that we're still you know, keeping our eye on. So check those webinars out because you can get a lot out of them. And that's about all I got for you today, other than if you can't take that, take it easy.